live stream. As always, first I will do a quick overview of some of the key markets, and then we will do a Q&A where I will try to answer some of your questions. We'll just wait for a minute or so, just in case someone is late, and just to do a quick audio test. So please be patient. And before we begin, I just want to make a quick disclaimer that nothing in this video should be considered as investment advice. So do your own research before committing your capital to these crazy markets. In just one more minute before we begin. So I just want to remind all of you to subscribe to our YouTube channel, like us on Facebook, and if you want to support us, you can buy us a coffee. Links in the description box below. Also, check our Discord group where we also post charts and commentary of mostly all of the key markets. Okay, so let's begin. As always, first I will be taking a look at the US 10-year yield. A key point I want to make is that yields are maybe one of the most important markets, since the direction of this market indicates whether financial conditions are tight or whether financial conditions are loose. So, for example, when we have rising yields, as we currently have been experiencing from the start of the year, this means actually that financial conditions are loosening, and this should be bullish for the stock market overall, while declining interest rates hints that financial conditions are tightening, and this could put downward pressure on the stock market. Okay, so very near term, I want to focus on this wave structure here, which is a flat correction and an almost exact 38.2% retracement of the latest five-wave rally, which we view as the very early stages of a larger five-wave sequence towards the 262 to 376 basis points area, which is our initial target zone, comprising the 2.618 multiple of wave 1 and the 1.618 extension of wave 1 in green. So we look for this target to be achieved by the end of 2022. So the bottom line here is that yields should continue higher until the end of this year, which should be bullish for stocks. Okay, so next one is the euro dollar, actually, not the pound. We will take a look at this market in just a moment, but first I want to mention that euro dollar was not quite following our script, and the wave count since the low is under pressure since prices have been accelerating lower. Our working assumption at this point is that prices are currently completing a flat correction for primary wave 2. However, key support for this bullish wave count is 1.05. A break below this level would negate this bullish wave count and then bring the 78.6% retracement level into focus. However, I believe that this wave count is still a very probable, and I don't want to get too bearish on euro dollar unless I see this low taken out. Because the big picture here is that prices completed a large degree 5 wave rally into the 2008 high. And since then, we have we may have well completed an ABC correction where we have a very clear 5 wave subdivision for wave C. And further, this correction is close to a 62% retracement of this entire rally, which is a very common wave relationship in second waves. And the reason I want to take a look at the pound is that it reveals also a similar structure, but specifically here, the pound looks that it may have already bottomed out almost exactly at the 62% retracement of this entire 5 wave advance. So we also have pretty good wave relationships as well. For example, wave C of Y has achieved equality near 1.24, and also wave Y is a bit above the length of wave W. So these are very common wave relationships, and these levels form an ideal bottoming zone for the pound. So going forward, I want to see some upside acceleration and a break above this corrective channel formed by wave Y. This would hint that the larger uptrend has resumed, and we will most likely see another strong uptrend that should continue at least in the next year or so. So I expect euro dollar to play out in a similar manner, but as I said, we need to see some confirming price action to the upside before we call a tradable low in place. Okay, so next up, I want to take a look at NASDAQ futures. So, if you have watched some of our previous streams, you know that we are overall bullish on stocks and we view the decline from the top as a correction, as as a simple zigzag, where wave A is a leading diagonal and wave C has so far achieved a 62% multiple of wave A, which usually satisfies the minimum downside expectations for a C wave. However, before we conclude that stocks have bottomed, I would like to see this channel, descending channel, broken to the top side. So the break currently occurs at about 13,748. An impulsive break above this level would begin to suggest that stocks have bottomed, and we'll see a bit later in the stream. I have picked some individual stocks that already show a bottom in place, so just stay tuned for that. So basically, it's only a matter of time until stocks bottom out. If we see a larger break below the 0.618 multiple of wave A, this would unlock greater downside potential towards the next important level at 11,423, where wave C would achieve equality with wave A. However, this is not my preferred trajectory, since I already view some individual stocks as potentially bottomed, so I don't want to get too aggressive on stocks in general. Also, as I discussed earlier, I believe that the dollar is overall approaching a turning point, and we should see a bearish reversal for the dollar, which should be bullish for stocks in general and commodities as well, as we will now discuss. First, starting with gold. So basically, here our wave count remains mostly unchanged, with the exception that we are now completing a larger correction for minor wave 2, and the 62% retracement of minor wave 1 overall remains strong near-term support. It comes in at 1891. So into the new week, I would look for a return above the $2,000 level to gain evidence that the second wave is complete. And ultimately, I would look for a sharp move higher in wave 3 toward 2367, the 1.618 multiple of wave 1 in 2022. So this is my preferred trajectory for until the end of the year. I will be looking for a sharp third wave rally towards 2367, although greater upside potential exists. So once wave 3 is complete, I will look for a corrective pullback in wave 4, similar to that in wave 2, but maybe a triangle. And it should take, again, maybe a month or so to unfold before the final leg up in gold in wave 505 gets underway. So our ultimate target is 2470, which is a reverse 2.0 multiple of the entire correction in intermediate wave 4. Upside acceleration. Prices will likely gain upside acceleration once the wave 1 high near 2070 is overcome. Okay, so next up is crude oil, and right after that, natural gas. So inflation pressures overall will likely continue, since specifically oil likely needs a series of fourth and fifth waves higher to complete a larger impulsive rally from the low in April 2020. So very near term, I am tracking a developing triangle for wave 4 and purple, which looks complete or nearly so near $95. So we should see a bullish trust in May that should carry prices above $130. And let's zoom out a bit. A supportive feature of this wave count is that wave 3 in purple is an almost exact 2.618 multiple of wave 1. So the anticipated rally in wave 5 in purple, it will likely carry prices above the prior swing high and likely then target $145 to complete minute wave 3. At $145, minute wave 3 would equal 4 times the length of wave 1. And ultimately, I would look for the ongoing impulse from the low to target the reverse 1.382 multiple of this entire decline since 2008, the global financial crisis. However, this target is likely to be achieved next year. Okay, so let's continue with natural gas. Okay, so this is the wave structure for a natural gas. I believe that wave 3, intermediate wave 3, has topped out, forming an almost ideal corrective channel, and a corrective pullback in wave 4 is now underway. Further to note, we had a throw over, which is basically prices spiking above the upper trend line of the channel and then quickly falling below it, and the close back below this trend line hints that a top is in and a corrective pullback, in this case wave 4, is currently underway. Wave 2 was a sharp zigzag correction, so we expect wave 4 to unfold as either a flat or a triangle. The wave 3 high near $6.4 is a near-term support. If this level breaks, the 38.2% retracement near $6 should be strong support to any further decline below there. Ultimately, I will look for wave 4 to unfold until the until June 14th to reach equality with wave 2 in terms of time. And once wave 4 is complete, I will then look for an impulsive rally to new all-time highs. Okay, so next up is the food index. We continue to highlight here that prices have completed a long-term bear market since the global financial crisis. This 12-year trend line was broken in May 2021, and we are currently accelerating higher in a third impulse wave. Minor wave 3 is currently approaching the 2.618 multiple of minor wave 1. However, given the internals of wave 3, this level will most likely be exceeded, and the next important level to note above there is $28, where wave 3 would achieve a 0.23 multiple of wave 1. Okay, so now let's take a look at some crypto, starting with Bitcoin, which is the benchmark. Okay, so here we continue to explore two probable wave counts. The first one is a complex correction in primary wave 4, where we need a up-down sequence to complete wave 4, as I have outlined on the chart. The prior fourth wave low should serve as strong support. The second most probable scenario is wave 4 developing as a triangle, in which case prices will remain above the prior high near 32,576 and ultimately give way to a rally to new all-time highs in wave 5. A key resistance level to note is 48,409. So an impulsive break above this level would begin to suggest that wave 4 is complete and the next impulsive rally in wave 5 is underway. The reverse 1.382 and 2.0 multiple of the 1-year decline in Bitcoin are our targets for 2022. These targets should be achieved maybe later this year. Okay, so next up is XRP, which is one of my favorite altcoins. So we made a very small adjustment to the wave count. Overall, our target for 2022 remains the $12 handle. However, the ongoing correction we initially labeled as a triangle, but if we zoom in on this wave structure from the high near $2, we can also identify as a smaller triangle. So I'm starting to consider that this correction is actually a more complex correction labeled WXY, where wave Y is a triangle. And let me just zoom in on the triangle. So prices have now approached the lower trend line of the triangle. So ideally near this trend line, we should see a bullish reversal in primary wave 5. Key support for this bullish wave count is the 51-cent low, the low point of the triangle. If we get a break below this level, this would unlock greater downside potential in XRP, but this is not expected. So XRP overall should be close to a bottom, and going into summer we should see a bullish reversal in wave 5. Also, if we extend and then connect the trend lines from the triangle, we get an intersection point at October 3rd of October. So this is called the apex of a triangle, and this gives us a date before which wave 5 should complete. So the bottom line would be that we expect a rally to new all-time highs, specifically towards $12 before the start of October. Okay, so this concludes my short presentation of the markets, and let me just check whether we have some questions to answer. I almost forgot. We we have to I had a couple of individual stocks to take a look. Okay, so we do have some questions, but before I jump to those, let me just take a look at the individual stocks that I had in mind. So the first one is Baba or Alibaba. So actually, I will be looking at four Chinese companies, but they are all listed on the NASDAQ, so or on the US market to be precise. So all of these four stocks that I will take a look at have potentially bottomed, and we are at a very key juncture. So these are definitely on my watch list for potential buys in 2022, and specifically long-term buys, because as we can see on the chart, Alibaba has traced out since 2015 a huge impulse into the late October 2020 high. And since then, prices have been crashing down in this ABC pattern where wave C is extended. And this is maybe close to maybe a 90% retracement of this entire rally. So as long as we remain above 57, $58, this is a very, very bullish wave count and a very good opportunity in terms of low risk and very huge upside potential. So if I zoom in a bit, we can see that we recently had a sharp bounce, which was then followed by what appears to be a corrective pullback, a flat with an extended C wave. Further to note is the island gap reversal, where prices basically gapped down and then quickly gapped higher, forming a like an island pattern with a vacant space in between. So this is usually a very bullish reversal pattern. So this actually shifts our focus towards further signs that Alibaba has bottomed. So a key objective here is breaking above the wave 4 high near $129. Upside acceleration above this level would begin to build the case that Alibaba has bottomed. And let's just draw a trend line from the top and connecting some highs. This would also give us let me just adjust the chart a bit. So if we see a solid break above this downward sloping trend line that connects the peak and the wave B high, would be definitely an initial bullish sign. With the recent bounce, prices broke slightly above it, but the bounce was then quickly faded, so a larger break above this trend line and the prior fourth wave high would be a bullish sign overall. Okay, so next one is JD.com. So here we have more or less a similar setup where prices completed a huge five-wave rally since 2018 into the 2021 February high. The subsequent pullback is likely corrective, a simple zigzag, which is also close to a 78.6% retracement of the entire rally. And the latest price action also reveals an impulse followed by a three-wave corrective pullback, which is an almost exact 62% retracement of the rally, of the preceding rally. So this is very common for second wave pullbacks. To establish or to ensure that JD has bottomed, I would need to see prices break above the central line of the channel and then above the upper trend line of the channel, which currently comes in at about $84. This would solidify this bullish view and likely then lead to a rally initially toward $108, the wave one high, and ultimately well above this level. And let's just, for the fun of it, do some projections. I will be doing the reverse Fibonacci technique, where for a third wave we can easily look for a rally towards the reverse 3 and 4 multiple of wave 2. So let's see where those come in. Okay, so I have actually projected a 1.618 multiple of wave 1 as well, which comes in at $188. So this is a strong but only an initial target, and a solid break above there likely then targets the next projected Fibonacci levels. The 2.618 multiple comes in at $277, and the reverse for multiple of wave 2 comes in near $300. So quite a bit of upside here. Okay, so next on our list is Baidu, which is an artificial intelligence company. So the interesting thing here is that prices completed a large degree 5-wave rally, which was then followed by a flat correction that ended near the prior fourth wave low and the 62% retracement of the entire rally. So this is a common relationship in second wave pullbacks. The sharp rally is then viewed as wave 1 of a larger 5-wave rally, similar to that from 2005 to 2014. So basically about a 10-year rally is to be expected in Baidu. And if we zoom in a bit, we can see that in primary wave 2 is also about a 90% retracement of wave 1 and a simple zigzag, drawing a trend line from the top and connecting the wave B high. We can see that we're very close to break above this trend line, which would begin to suggest that wave 2 has bottomed, and upside acceleration above the wave B extreme near $182 would help bolster this bullish view. And last but not least is Razer. So again, here we are bullish, and specifically this stock looks more aggressive in terms of wave structure since the 2020 March low. Prices traced out a couple of ones and twos. Intermediate wave 2 is exactly a 62% retracement of wave 1. As I mentioned, this is a very common for a second wave pullback. So going forward, I will be looking for a sharp rally towards the $5 handle in wave 3 of 3. The next key levels to note above there are the 1.618 multiple of primary wave 1, which comes in at about $5.50. So these are strong upside targets going forward. Okay, so this wraps it up for the individual stocks. And let me see for the Q&A. Okay, so we have a question about copper. So let me see. I think I had some wave counts of copper, but let me see first if I can find those. Hmm. Okay, so let's try let's try this tab. Hmm. It looks like my internet connection is a bit slow. Okay, so yeah, unfortunately my wave counts are not saved for some reason, but let's start with the most obvious. I can easily identify a large degree triangle which is complete and currently being followed by likely by a 5 wave rally to new all-time highs, where let me just put some labels, where we are currently correcting in a second wave pullback. And let's draw some Fibonacci levels. So I think we actually discussed copper in a previous stream, but doesn't matter. We'll take a look at it again because it has been, I think, maybe 2 weeks since our last update. So not a bad idea to look at copper. Okay, so my working assumption here is that we are currently tracing out an expanded flat for intermediate wave 2. And let me just adjust the Fibonacci levels further. So yeah, so an expanded flat typically implies a drop to a new recovery low, in this case before below $4, which is the wave A low. And the minimum downside expectations for wave C would be the $3.8 level, which is a 38.2% retracement of wave 1. A break below there would likely then target the Fibonacci cluster near 3.5 slash $4, and this Fibonacci cluster here would be the ideal bottoming zone for intermediate wave 2. So this would be my script for Q2 to look for a somewhat sharp decline towards the 3.8 to $3.4 handle before we see upside resumption. So yeah, this would be my blueprint for Q2, and eventually we should see a ultimately we should see a sharp rally in intermediate wave 3 going forward, but I think this will likely play out maybe as we approach the end of 2022 and maybe possibly next year. It depends. So just keep in mind that C waves in a flat are often aggressive, and this decline should continue to unfold sharply lower towards the cited levels. Okay, so let me see if we have something else to take a look at. Okay, so no more questions at this point. So I I will be wrapping things up. So thank you for watching. Uh, we will be doing our next live stream again on Sunday, possibly next week. So like us on Facebook to get updated on that. Also visit our Discord, support us if you want to by buying us a coffee, like links in the description box below. So thank you for watching once again, and bye bye.